Hey guys, and welcome back. So today we're going to jump right into things, not waste any time here. We're going to look at Bitcoin. So we saw last week Bitcoin put in a new all-time high. We were able to break about 112,000 US dollars or 150,000 Canadian. So it's pretty amazing. We've come a long way. We've been in this market for multiple cycles now, and to break that 150K mark even in just my local currency is pretty amazing. But I want to take a look again. We need to dissect the high and low time frames to figure out what could be playing out here. So we've got the Bitcoin chart and we've got a handful of indicators, the normal ones we always look at, as well as I've got another one here, this correlation coefficient, to look at the comparison of Bitcoin versus tech stocks and Bitcoin versus gold. So what we see here, essentially, we're continuing to put in higher highs here on the price action. So similar to kind of what we saw over here, although we didn't get this little retest yet. So last time we had this golden cross here, price actually came back, retested it. We've looked at that came down to a 0.5 Fibonacci retracement. So we're kind of looking for something similar to potentially play out right here. If we take that, just looking based here, and we take our 0.5 Fibonacci, it kind of lines up right with those moving averages. You can see over here we also came down, retagged those moving averages before continuing up. So we could get another similar move here today. That could actually take us down to the low 90s. So a move I don't think a lot of people would be prepared for. Everyone's kind of frothing at the mouth right now, especially as Bitcoin's showing this relative strength. But we need to pay attention to the charts, we need to pay attention to the data, and we need to protect our positions and look for opportunities. So is this the time that we want to be jumping into the market with both feet? In my opinion, I do not think so. We have the positions that we bought during the dip, so we're happy with those. We've just maintained initial exposure as well. So we've got nice positions in profit. We've got trailing stop losses up to protect those profitable positions. So we're not super worried about the downside when it comes to actual losses for this cycle. What I'm more worried about is taking advantage of continued moves throughout this cycle. So we could get a continuation here. We could easily just come back, put in a higher low on the weekly, and then continue from there. Or we could break back below these lows here. That's going to be that signal that potentially the cycle could be over. Let's look at our indicators here though and look at the prior cycle price action. So similar to what we saw over here, we had our death cross. You saw that the majority of the downside was seen prior to the actual death cross here. We put in our lows, we came up, we got our golden cross, we retested that golden cross as support before continuing up and putting in new cycle highs. So what can we see here essentially? What can we derive? We saw a continued bearish divergence on the price action. I talk about those lower highs on the RSI and higher highs on the price action. So what we saw here is essentially price continued to go up. So bearish divergence here, and then continuation of that bearish divergence to the secondary peak. That's kind of what we're seeing right here for now. So this hasn't confirmed. This could break out and put in a higher high. If it does, it kind of negates that theory. But look, we're kind of flattening out, looking like we're meeting resistance right here underneath the overbought territory. So not the best look when it comes to the RSI. We can see we're still downtrending that price action while uptrending on our higher highs. So we can see from this peak to this peak, we had higher highs, and from this peak to this peak, we continued to put in higher highs. So we still have that bearish divergence evident on the higher time frame. Right now, MACD continues to be in a lower high scenario. It needs to break above. Our DMI, I want to point out, look at this. We're starting to curl back over. It's hard to see, but I'll zoom right in. We could be losing a little bit of momentum here, a little bit of bullish momentum. The vortex indicator, we are picking up a little bit of bearish momentum, but nothing to worry about too much right now in terms of the vortex indicator. But the directional movement index is what gives us that early signal that we're losing momentum. So what did we see over here? We saw this major extension of the DMI positive line above the ADX line with the orange DMI minus line nice and low. This tells me this is a strong, dominant, bullish trend with strong momentum as long as that ADX is climbing. We saw right here where we broke below, we kind of lost a little bit of momentum, came down, we broke below the orange negative line, really kind of signaling that downtrend that we saw similar to right here. And then we were able to actually break back above it briefly, but look at the difference between this move here and this move here. So you can see the ADX line and the DMI positive line were substantially stronger during this move up here. Right here, we did not get that support. The DMI positive line ultimately just breaking down and rejecting and kind of getting that bearish cross right there. That signaled the top. So where we broke below here, look at this alt. We'll take our point. So pretty much right where we lost that bullish momentum on the DMI is what signaled that top. We had that bearish divergence and we have that loss of bullish momentum. So we could be facing a similar thing over here. We had our primary trend here with the ADX showing good strength, you know, with that strong trend above 25 ADX, and we saw the blue line above it. We got our secondary rally here, so losing momentum because that ADX line was not able to extend as far, as well as the DMI positive line wasn't able to quite extend as far as it did over here, and we look like we could be rejecting here and breaking below, similar to what we saw here. So if that plays out, that is a bearish signal. Watch for that cross there. Watch for the negative DMI line to really angle up and put on that bearish pressure. And watch for the RSI to confirm here. So if RSI were, let's say, to break out, come back, retest this could actually be a bullish continuation move right here. That would be the best case scenario, but we could also just come up, you know, tag this trend line, curl over, and then just be due for more of that kind of consolidation period. So this would be more indicative of this move right here. We need to be aware of it because this could be a potential cycle top. Also, look at the volume down here. So not a lot of volume, and look over here. We're not getting a ton of volume either, so it's been pretty flat here. And we have that warning sign on the DMI, potential continued bearish divergence on the RSI and MACD. So not the best look when it comes to the indicators. When it comes to price action, we're holding higher highs, higher lows right now. Nothing to worry about in terms of price action. I think we could just be due either for a retest of these lows before continuation. Otherwise, we're going to be protecting our positions. We've got stop losses in place. What we see here is the correlation coefficient as well. So this is the gold to NASDAQ correlation. We can also see, you know, gold came down historically low while the NASDAQ correlation was really high on the initial run up. And then ultimately these start to converge towards each other. So the NASDAQ loses some momentum and gold starts to pick up that momentum. And we saw that top kind of also coinciding right around here where we got that convergence of these two moving averages. So what do we see here? We're starting to see these two moving averages come together. You know, we could be looking at that convergence similar to what we saw over here. So that's another similarity to the cycle high from the prior cycle. But we're going to jump into the low time frame because everything looks a little bit different on multiple time frames. So let's take a look at the 4-hour here and take a look at the same indicators that we normally look at. I'll throw on the vortex indicator back on there. So what can we see here? Basically, the dominant bullish trend was right through here, losing a little bit of momentum. We saw the negative line breaking above. Same thing up in through here. That bullish trend losing momentum. RSI continues lower highs on the MACD. We see here, we actually came in, put in a lower high, a lower low. We were able to take out that lower high. So we've kind of broken that structure for now. We need to hold these lows. You know, if we come back to 107.6, you know, even down to 106.5, as long as these lows hold, I think we can continue just chopping around in this range, hopefully get a bit of a breakout, retest these highs here, and then continue up from there. When we look at the 1-hour chart, we can see kind of also we're holding above this previous swing resistance, now pivot support. But we also see bearish momentum picking up here on the vortex. We kind of had our MACD flipping red here. RSI came back, rejected on the underneath of the moving average, and the DMI kind of just showing neutral-ish momentum here. So market's a little undecided. I'm not really surprised. There's still a lot of uncertainty out there in the markets. There hasn't been any real trade deals that we've had. You know, we see the Bank of Japan bond rates, their long-term bonds are spiking like crazy. Their inflation is going up. You know, we still have that major disconnect between the stock and bond markets. It's hard to tell if the market is in a risk on or risk off attitude. I think right now we're just happy with the exposure that we have so far, and we're going to continue maintaining it as we see fit. You know, trail those stop losses up. This isn't really the time to be getting aggressive, in my opinion. We can see we are holding this trend line right now, so looking pretty good. But we'll flip to the daily, see what we're looking like in terms of the daily. It's looking very overextended here. So we pretty much broke out. It's been, and you look at the weekly chart, we've been up for the last 8 weeks straight. So 1, 2, 3, 4, 5, 6, 7, 8 weeks straight are green. That's a pretty crazy move. Even in through here, we didn't see that kind of consistent upwards move. So what do? You know, we have to recognize there is some overheated market conditions here. We've looked at the indicators on the higher time frames, like the weekly. You know, getting those higher highs and lower lows, or lower highs on the indicators on a high time frame is not ideal for me, especially when we see we're losing some of that bear or that bullish momentum that we were trying to pick up. It shows me that similarity to the prior cycle. Although we do have buying pressure in here, it's relatively low volume in comparison to things. So we need to be aware, we need to be prepared. Let's take a look at the 12-hour. Same thing here. You can see the RSI curling over and rejected. The MACD is red. It looks like it's curling over again. The DMI positive line curling back over. If that vortex continues to break up, that's that signal that the bearish momentum is picking up. I do think we are due for a retracement. You guys know my thoughts. Nothing goes straight up forever. Even in that prior example I pointed out, we came back and we retested that moving average cross here. So what we saw come up, 0.5 Fibonacci retracement, retest support, higher low, continuation to the upside. So if we pull our Fibonacci from this breakout to this high, we can see looking for that potential target around this zone here. If we get it, it could be a good opportunity for a swing trade in Bitcoin. Otherwise, I don't think it's really worth the risk at this time to be taking positions in Bitcoin unless, you know, you've already got a position and you just want to DCA. There's nothing wrong with DCAing, but the point of DCAing is you buy regardless of the price. Looking at the indicators and the price, it's not worth the excess risk, in my opinion. I would rather save my cash for a different opportunity because I think we could be due for a larger retracement. You know, as always, nothing goes straight up forever, and I'm not going to buy into an overheated rally. I'm not going to FOMO. You know, patience is what has provided me some of the best trades in my kind of investment journey. So again, if this continues to the upside, we have Bitcoin exposure. We have exposure in proxies like altcoins, Bitcoin miners. We're going to capitalize on that move no matter what. It's just not worth the risk to put my sidelined cash. You know, when I've realized profits, I'm not in a rush to put those back into the market. I'm making sure that the technical setup makes sense to do so before I actually put that back into the market. You know, I'm not here to try and chase little moves all the time, but we see we have this nice upsloping trend line holding as support. So for now, we can continue to the upside, but we could also break down and come back and revisit this support down here. So kind of in no man's land, maintaining our exposure, protecting our profitable positions, recognizing the potential overextension on the higher time frame, but also recognizing that there's pretty strong price action here on the weekly. So we can still come back here, test this support, and maintain that uptrending price action. That's why I want to really focus on waiting patiently, because if we get this retracement, it's going to catch a lot of people off guard. You know, people who are chasing the top. If we come back to that 0.5, that's a 15% drop from that price. Even if we come down to that 786, that's a 26% drop in Bitcoin. That's not uncommon. Bitcoin is a very volatile asset. Bitcoin can move 10% in a day, no problem. So we need to be aware it's always a possibility. The kind of the moving averages are stacked there. We've got our support stacked down there, and this has just been a crazy upwards move. So I don't think it goes up forever. We're going to come back, retest support. We're going to be watching our indicators. Again, watch those multi-time frame indicators as we get into our retracement and start approaching some of these lower targets. Look on those lower time frame indicators. Make sure our 4-hour, our 1 day, our 12-hour, those different, you know, lower time frames or medium time frames are really supporting another leg up. So that's kind of my thoughts for now. You know, Bitcoin showing a lot of good relative strength, but also continuing to show similarities to the prior cycle secondary peak. We could continue from here, but it's going to be dependent. We want to maintain these higher lows, look to enter potential swing positions in here, and then ride those to the upside, continuing to maintain our exposure. If we get a lot more warning signals out there, we might look to either, you know, even more conservatively protect positions or look to take some additional profits. So I have a little bit of Bitcoin that I'm looking to kind of sell. You know, I was even considering taking a little bit of profits here around 110,000, just even after this big move up. So the reason is I've been holding this Bitcoin for a long time. My target to sell it was about 120 to 130,000. So it's kind of close enough, but I'm not quite getting the warning signals that I need. If we get a breakdown, so let's say price breaks down, we come back, we get a retest of resistance and a rejection, then I do think we're likely to continue lower. That's where I would look to kind of unload that little bit of Bitcoin here. It's going to be just shy of my price target, but that's okay. That's, you know, we're still looking at a 5 to 6x run on that position or on that Bitcoin. You know, buying in around $25,000, $30,000 Canadian and selling at $150,000 Canadian is nothing to be afraid of, nothing to be mad or angry about. If price continues to the upside, guess what? We still have exposure. We still capitalize on that. But I feel way better paying myself, looking to take that money, and then again, we wait patiently, we wait for our entries, and we buy stuff when it's undervalued and oversold. So right now, we're a little bit overbought and potentially a little bit overvalued when you're comparing things to other assets right now. Bitcoin has vastly outperformed in this run-up, but nothing goes straight up forever. I want to make sure I'm mitigating my risk. I'm protecting profits at this point in the cycle. Yes, we can continue higher. Yes, we could go to these crazy targets, but I don't think it's going to be a straight up shot to the moon. We're going to come back, retest resistance. So I'm going to take profits continuously and strategically. I'm also going to strategically look to reinvest profits. So that's kind of my thoughts right now. Not over risking right now, but not worrying. High time frame price action looks really good. We need to do some work on the indicators. We want to break out and invalidate this bearish divergence. So when we look at the weekly and we see that trend line that we draw from these lower high peaks, so if we see RSI break out above, that's a bullish signal for continuation, and we can look to maintain that exposure. If rejection is confirmed and we start to break down, we're going to look to mitigate some more risk, potentially take some profits off the table, and look to reinvest those profits on opportunities elsewhere. So I don't care if it's in Bitcoin, I don't care if it's in Ethereum. You know, I've stopped putting blinders on, focusing on one asset class. What I want to do, build cash positions and take advantage of undervalued assets no matter the space. That's what we've done in the past few months, nailing some amazing trades in stocks, altcoins, swing trading Bitcoin, crypto. So really, there's endless opportunities out there, but we need capital to take advantage of those opportunities. So we always want to make sure that we're maintaining a level of capital or a cash position that we're comfortable with. You know, for some, it's about 30%. I've been kind of fluctuating between 30 and 50% lately. You know, as I've been making money on trades, building that cash position up to 50%, you know, then look for opportunities to put a bit back into the market and just rinse and repeat. That's kind of what I do. I look for strong fundamental companies or strong fundamental investments that are cheap and oversold. So we're not buying resistance, we're not buying overbought, we're not looking at chasing stuff that's already run like crazy. We're patient. Patience. That's the biggest thing I can teach you. All of these skills mean nothing if you don't manage your emotion, if you aren't patient and you chase stuff up at the highs. So really, keep focusing on the strategy, keep looking for those opportunities, whatever the space, and make sure that you're capitalized to take advantage of those opportunities as they come. So thank you so much for watching, guys, and I'll see you in the next one.